Hi, I'm Julie Paez, the team leader of the JWP group at REMAX, and I'm sitting down today with Dee Cayo from Atlanta Mortgage over in Monaco. Hi, Dee.
Hello.
She is my top preferred lender, and she's always on top of what's happening in the world. And she had called me about a week ago about something new that's coming down the pike for second home mortgages. And since we do a huge amount of them, it was something I really wanted to make available to the public so you guys could learn how it's going to affect you in the future. And so if you're on the fence, if you're in the middle of negotiations, if you're in a position where you need to lock a rate soon, now is definitely the time to do it. So I invited her to talk with me today and she agreed. So we're going to just go do a little back and forth about interest rates and about what's going to be coming down the line with mortgage rates. So Dee, why don't you introduce yourself?
Thank you. I am Dee Cayo. I run a team, an office in the Northwoods of Wisconsin, and I've been doing lending in the Northwoods I'm in my 21st year. So I've seen a lot. We have a lot of notes over the years. We know how to get, our crazy Northwoods properties through the system and approved and get buyers into their homes and second homes and investment properties.
And she also can pick up if we struggle. One of the things we talk all the time to our buyers about is the value of a local lender versus a person from out of the area, because the Northwoods is unique. We have septic wells, easement roads, shared frontages. I mean, we have a lot of unique pieces and parts that the city lenders, they're just not familiar with. How many, just curious, which I know we didn't talk about this, but how many times a year, and I have a feeling the number is going to be pretty big, do you have to jump in to save another bank's mess?
Yeah, boy, I don't know. I haven't done that count. I should, but it is.
You should do that calculation.
And usually it is, when we do, the client will tell us, if it was you, Julie told us to call you in the beginning. I should have, and they've got a relationship with I understand why they make the decision that they do, because they have a relationship with their banker, their mortgage lender that they've worked with for years in Chicago or Denver or Milwaukee or whatever. And that lender may be just an excellent lender. I mean, they may know their stuff, but they don't, what I always say is they just don't know what they don't know about the Northwoods. And so when they get the appraisal, that's when they see that our comps, the comparables in there are 20, 30 miles apart instead of all within, less than a mile radius, which is standard. They see the shared roads, they see the easements, they see the septic wells, all of that stuff, and they just don't know how to handle it.
And since we're talking ever so gently about the appraisal process, I think that's another unique thing, in my opinion, where a local lender like yourself is above and beyond, because you know how to get an appraiser to show up.
Right.
I think when we work with, people are usually, I got the house, I want to close in 30 days. And when you can't get an appraiser out there because the appraisers up here don't recognize the bank and the appraiser can't get out there for 8 weeks, we can't close in 30 days. So, and that seems to be a huge difference between you and out of area lenders as well.
Yeah. Most lenders these days use what we call appraisal management companies. Okay. So because there are laws in place that we can't directly correspond with an appraiser, like I can't call the appraiser and say, hey, I need an appraisal done on this property. And can you get it to me tomorrow? And by the way, this is the value we need. That doesn't apply. No. So
nor should it. We don't want it.
Absolutely correct. So, but most companies have gone to use appraisal management companies, which are national companies, and they are assigning the appraisal order to an appraiser. Could be someone in the market, could be someone outside. And we have our own system through our corporate office. We have an appraisal desk, and they are assigning those appraisals. So it's coming, through our company to them. And it just, they see the orders in Atlanta Mortgage. They know they work with us every year in the community, and it just,
it's a smooth process, which for our end for managing expectations is just huge.
Yes.
Awesome. But anyway, so I know recently I just came back from a conference and they talked about that. We've all been talking about interest rates going up for what, 2 years, 3 years now? And I think now we know officially it's going to happen. Why don't you give us a little details on what 2022 looks like with interest rates?
Yeah. Well, there's a lot of moving parts, as there always are. But just overall, generally speaking, we've already seen, our conforming rates increase. Some, not quite a whole percentage point yet, but we're getting there. And overall, the driving forces that raise rates, number one is inflation. Inflation is the enemy of mortgage rates. So when we start to see inflation, which we all know we're
Yeah.
seeing it every day, you can expect, it is a given that mortgage rates are going to increase. It just happens. So that we're seeing, so that's why we're already seeing mortgage rates increase. Number two is the Fed, who everyone talks about the Fed. The Fed has been investing in mortgage bonds or mortgage-backed securities for a number of years, which has artificially really kept our interest rates extremely low.
Mhm.
They've been doing that. They're on their balance sheet, and they've been just buying. They're the number one investor of our mortgage bonds in this country. Yeah, so they have been talking about tapering the investment of mortgage-backed securities for a long time. Every time they talk about tapering, it spooks the markets and it drives mortgage rates up a little bit.
Okay.
They have begun tapering. They are set to be done tapering in March, meaning they're no longer going to be investing in new mortgage-backed securities. Now they may be reinvesting the ones that are renewing. They may reinvest those, which will still kind of help us out a little bit. But so that is also going to raise mortgage rates overall.
And I know that that has put a lot of fear in a lot of buyers, but I guess when I look historically at the world in a big picture rate, even though we might bump up to 4%, 4.5%,
Yeah.
typically what have interest rates been? I mean, I know when I bought my first house, they were like 8.75%.
Yep.
I think we just got spoiled. Maybe a little bit is the right way of looking at that.
Yeah, 8.25 was our first rate. And we're really young.
Yeah. Yeah, we are, Dee.
So, anyway, but yeah, and so since then rates have really gone down. And when I first got into the mortgage business, we were in the sixes or we were 6, 7, and then 6. And then I remember the first time they got under 6 and I was like, oh my gosh, like I can't believe this.
Yeah.
And they're under 5, and then they were under 4, and then so this is not normal, these 2s and 3%. So
no, and I think that that's the one thing that we have to be responsible and remind, buyers, especially the first time buyers, the ones who have been seeing this interest rate for quite a long time, that yes, it does feel a little doom and gloomy, but in the big picture of things, it's really not that bad.
Right. Well, and do you know what speaking of first time home buyers, so if a rate is 4% or whatever it may be here soon, what's the rate of renting? What's your interest rate?
It's gone up over 7% from, insignificantly over the last year. It's insane.
But also 100% of your rental payment is like interest. So your rate is 100% when you're renting.
Yeah. And when I look at how much rental income has gone up over the last year, or actually the last like 18 to 20 months, I mean, the numbers are staggering compared to what the housing market has gone up. I think they're twice as high. So it's gotten, even in our
really
area in the Northwoods, what used to be a $700 rental is now $900 or $950. I mean, which you can get a decent mortgage payment for that in the world where we're still living in. So
right. Yeah. Absolutely.
So I know that now, haven't they told us that there's definitely going to be 2 big jumps in interest rates that year? Or is that just something I read?
Yeah, no. Yes. Okay. Well, we are also anticipating the Fed to raise rates. Now, when we hear that, that means the Fed is raising the overnight lending rate. So it's a short-term rate.
Okay.
And so it's very different than mortgage rates, which is a long-term rate, a 30-year rate. So there is a lot of confusion in the market that when the Fed raises rates, that mortgage rates automatically increase. And the whole purpose of the Fed raising rates is to curb inflation. They're managing inflation. And so I remember earlier I said inflation is the enemy of mortgage rates. So as they help curb inflation, it actually will help our mortgage rates. So
Okay.
before the Fed raises rates, we'll see them go up. And then, and it also, there's sometimes people say, mortgage, the rates move on the fear or on the news, but when it actually happens, it kind of settles down again. So that's historically what we see.
Yeah. So now I know one of the things that was astounding to me was what they're doing to second home purchases and mortgages. Because again, I would say probably 80% of the business that we do is investment or second home. So not a lot of people are talking about this, which is why I really was excited to get you on video to talk a little bit about how that's going to affect buying a second home or an investment property, which it sounds like how they're going to be looking at a second home, which it is, even though for a lot of people, it's more of a place for their family to go on vacation, but it sounds like the government is now going to look at it, whether you're using it for an investment or for personal use, it's going to be an investment.
Yeah, yep. So early this year in January, the FHFA came out. FHFA is a federal housing and finance authority or agency, and they run Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are the major investors of mortgages in our country. They guarantee all the mortgages, all the 30-year fixed, 15-year fixed typically are sold to Fannie Mae and Freddie Mac. So they did come out with some new, we call them LLPA, it's the jargon, LLPAs, loan level pricing adjustments for second homes. There are loan level pricing adjustments for a number of reasons. Credit score for one example, the lower your credit score, you're going to be, there's some adjustments, and that's why people with lower credit scores get higher interest rates typically.
Which makes sense.
Yeah. So there are LLPAs are not new, but this is new for second homes. We have enjoyed for a number of years almost the same rates for second homes as for primary residences. And then investment properties always had the little higher rates. Well, essentially what they are doing is they're bringing second home rates in line with investment property. Close. It's not exactly.
They don't care about the use. So let's make that very clear to them when they're giving you that it doesn't matter if you're buying it to actually have as a rental property your second home, or if you're buying it just for personal use. That use of that property does not matter to your LLPA.
Well, investment is classified differently than second home. So if it truly is investment, you can't have more than one second home in a certain market, like in a region area. So in Eagle River, if you already own a second home and you're buying another one, you can't have two. It doesn't make sense. Underwriting is all about what makes sense. So that doesn't make sense. Those need to be called investment property. Now it really doesn't matter if it's called investment.
So I was going to say, even if you were buying your first one tomorrow or in May 1st, and it was your first second home, they don't care because it's going to be considered an investment property.
Nope, it's still a home. It's going to be priced similarly to an investment property. So they don't care what the use is. It's still going to be getting the same consideration from So I'll just show you, share my screen. Let's see. So this is the official announcement. It came out January 5th by Fannie Mae. Same thing with Freddie Mac. They've got the same kind of thing. But here's the grid that shows the second home adjustments. So in this case, it's not by credit score, it's by how much you're putting down. So this 60%, up to 90%, that's your loan to value. So 90%, you're putting 10% down. Enjoyed. One of my favorite things was to show people how to buy a second home with only 10% down. Hardly anyone did it, but we have something we offer called Upfront mortgage insurance. So you pay a little bit of money. This is, going to be very soon in the past, so it's not really worth talking about, but it was a great way to buy a second home. And I had the most savvy investors. Once I showed them that, they would be like, oh, yeah, that makes perfect sense. Why wouldn't I do that?
Why wouldn't I do that?
Yes. Yeah. So that's going to go away now because you see 90% 4.125% adjustment. Now, this is not the rate.
I was going to say, let's clarify that. So if
Yes,
the rate is
yeah.
3.125, you're going to be paying 4.125 on top of that.
No.
No. Okay.
It's not the rate. This is the cost. So there's a price of a mortgage rate, and then there's the rate.
Perfect.
This
Okay.
impacts the price of the rate. So, you hear about people paying points. Do you want to pay points to buy down your rate? These are points on the rate. So you could pay 4 points outright. So that's a lot of money,
Mhm.
on a $400,000 loan. That would be $16,000 if we're.
I was just going to do the math on that. So
Yeah.
basically you'd still get the rate of today's rate, but you'd pay that 4.125
You
up
could,
with your
yeah.
loan fees to keep
Yeah.
that rate.
Yeah. Most people would not opt to do that. That's an expensive, outlay of money. So generally speaking, 1 point in cost impacts your rate by 0.25%. So
Okay.
4 points, generally speaking, is going to impact your rate by 1%. So we should see mortgage rates come up anywhere down here at the 60% level by about 0.25% in rate, all the way up to, a whole percent in rate.
Okay.
So, or there could be some combination of, I'll take a little bit high, 0.5% higher in rate, and I'll pay some points. So, and we haven't seen these rate sheets come out yet.
Okay.
So there's some undetermined, this is going to have to play out a little bit to know exactly how it's going to impact it. But
So if we ran a scenario, we said we're buying a $500,000 home and the interest rate got, let's say 4% today is the interest rate. And they wanted to put 15% down on the loan. We're going to be looking at that. They could either pay 4 and they could increase their interest rate to what, 4.25?
no, because the pricing adjustment is over 4 points on 15% down.
Okay.
So if the base rate is 4, you said?
Base rate is 4% on $500,000.
Yeah, most likely the rate would go up to about 5%.
Okay. And then they would still have to pay the points down.
No.
Okay. So it's one or the other.
Or a combination.
Or a combination of both. So you could do half and half. Okay.
Yeah.
Yeah. Fantastic. It's going to be a new thing for us to all figure out.
It's a new thing. I mean, the message for today is, if you're under contract right now, talk to your lender and see if you're locked in. Make sure you're locked in. And that's if you're closing, before the end of March. If you're closing in April, you're more than likely to see these higher rates. You're screwed.
So in the last week, I've already had 2 of my sellers who have gone under contract, and the buyers have said, oh, I have the opportunity to get out of this contract because I wrote in the contract an interest rate that's too low for what's happening to the world in interest rate. So that's another, big aha for me, at least as a listing agent and working with buyers, to make sure we're talking to the lender to write in an interest rate that's actually going to be applicable 30 days from now when they get locked in.
Yeah, I've seen it where listing agents.
Oop, Dee, did I lose you? Are you there? Oop. I think I may have lost you for a second. Boy, I sure hope not. Dee. Well, I know we were talking about the fact that if you are in negotiation or you're on the fence about buying, now is the right time to definitely get off the fence and get your offer written and get it accepted and try and get it to closing as soon as possible, because the rates are changing quickly and lending restrictions are going to be coming on, especially if it's a second home purchase for you. Yep, I think I lost Dee. So I guess just some good information for you to have, and hopefully, if you're working with us, we always try to get you pre-approved with a local lender so that you can have the most accurate information and we can negotiate in your best interest so that you don't put yourself in harm's way with the contract. And if you're looking to buy at a second home later on this year, We just want to make sure that you have all the facts so that you know exactly what those dollars and cents are going to be to you, because every dollar and cents obviously means a lot when you're buying a home. So just some great information. Oh, I think she's coming back in. Hold on a second. There you are.
Hi. I don't know
I
what.
was just chatting away. One of the things I wanted to just ask before we, kind of start to wrap up here is, do you think that this is hard and fast? Is there any chance that they'll talk about this and they'll say, hold on, shut the front door, we're really messing up the world, maybe we shouldn't do this?
Yeah, well, they actually did something else with second homes in 2021. In March of 2021, they came out with some major changes for second homes. It was structured much differently than this. It wasn't an LLPA. It had to do with the percentage of second home loans that any one lender could have in their portfolio. It was a very small number, something like 7%.
Oh,
And
that would kill us up here.
Yeah, exactly. So I was really nervous about that. I didn't like it at all, but knowing that, I'm in a second home market. And they got rid of it in about October. So it was March to October. And that was a lot of pressure, that the mortgage industries and the actually NWAR put on them, and they got rid of it. But so we have it again. I don't know. It would be great if it went away. I think that that's, optimistic, maybe a little too optimistic to think that it really is coming, the FHFA is run by the government. Our government right now really wants to, open things up for first-time home buyers and give the benefit to them. And some of this cost that they're charging for second home buyers is going to benefit the first-time home buyers. So there is some good side to that.
And I was thinking about that because in the article that you sent me, they said they wanted to sort of level out the playing field.
Yeah.
But I have to say the majority of second homes that I sell are not to first-time home buyers. So I think it's a little bit, to me, if you wanted to lever the playing field for first timers, you think you would be doing it in a different way.
Well,
but again,
I think what they're thinking is that the second home buyers are buying up some of the homes that, could be primary homes.
Yeah.
So they're competing. Mm-hmm.
Well, we'll see. But anyway, I think the biggest takeaway, like you said, is if you're on the fence, get off of it now. And then if you are looking to buy this summer, you really need to understand what that, if you call your local lender or your average Joe lender and they tell you you're going to get a 4.0 interest rate on a second home, that might not be, you really need to dig into that a little bit more, correct?
Right. Yeah. If you're pre-approved right now with a lender for a second home, I would suggest reaching out to them and running through the numbers again and just seeing, or, at least, sometime in March, doing that for sure. So that they can look at that again and determine, maybe you were going to put 10% down or 20% down. Well, there's a pretty significant adjustment even for 20% down. So just want to look at that again. Yeah.
Awesome. Well, good. Well, thank you so much. And now if people want to get a hold of you, Dee, how can they find you?
Yeah, well, they can go to my website is deerates.com, DEERATES.com. Our office number is 715-388-7557. And then
I think we'll put all the information on there. I just don't know how to do that.
I know, that's what I was thinking. Shoot, I could flash it on there.
Yeah.
And then, of course, email, and we've got my cell number too. So
awesome. Thank you for your time today. I really appreciate it.
Thank you.
All right. We'll talk soon. Have a great day.
Thanks, Julie. Bye-bye.
Bye.